So, today we're going to break down a really high-stakes power struggle that's brewing over the U.S. economy. It's a fight that pits the very independent Federal Reserve against the, well, very direct demands of the White House. Let's just dive right in.
Okay, so it all kicked off with this one phrase from the president. A rather small number that could have been doubled. But what is this number he's talking about, and how on earth did it manage to ignite such a fiery public feud?
This is the number. 0.25%. At the end of 2025, the U.S. Federal Reserve made this interest rate cut. And yeah, it might sound totally insignificant, but in the world of global economics, trust me, a number this small can make some seriously massive waves.
So why even make this cut in the first place? Well, the Fed was basically trying to walk a tightrope. They were looking at rising unemployment and decided that was a bigger, immediate concern than the risk of inflation. And the thinking behind it is pretty simple, right? Lower rates make it cheaper to borrow money, which hopefully encourages businesses to expand and to hire. But this very careful, calculated move, it was met with immediate and really fierce criticism from the White House.
And this is where our two main characters enter the scene. On one side, you've got the Federal Reserve, America's central bank, headed up by Chair Jerome Powell. And on the other, of course, you have the U.S. president. Their clash isn't just about one little number. It's about two completely opposing ideas on how you're supposed to steer the entire U.S. economy.
Let's break this down. You can see the two philosophies right here. The Fed, they're in what they call a wait-and-see mode. They want to look at the hard economic data, job numbers, inflation reports, and let that guide their next move. The president, on the other hand, wants action, and he wants it now. He's demanding much larger cuts to basically supercharge the economy, and he thinks waiting around for data is just a recipe for slowing down growth.
And listen, this is not just some polite disagreement over policy. I mean, the president made it really personal, calling the Fed chair a stiff. Now look, putting direct public pressure on the Federal Reserve is already a huge deal. The whole institution is designed to be independent from politics. But personal insults? That's pretty much unheard of, and it seriously raises the stakes for everyone involved.
So what is really going on here? Why this deep division? It all boils down to a really fundamental question. Do you react to the economy as it is, or do you try to force it to go where you want it to go? Let's hear it straight from the horse's mouth, right? This is the Fed's official stance. Basically, they're saying, look, we're the mechanics with our heads under the hood. We're watching the engine, we see the data, we get the risks, and we'll make adjustments when and only when they're truly needed. It's a very methodical, very cautious approach. Their biggest fear is acting too soon and accidentally causing runaway inflation. You know, where prices just spiral up and your money buys less and less?
The president's view? It's the complete opposite. He doesn't see interest rates as a tool for fine-tuning. He sees them as a rocket booster for the economy. For him, the argument is simple. Aggressive cuts will ignite growth, create jobs, and make the U.S. more competitive, like yesterday. In his mind, the risk of waiting is way bigger than the risk of inflation.
And, just when you think this whole thing couldn't get any more intense, a brand new twist enters the story. The leadership at the very top of the Federal Reserve is about to change, which throws a huge layer of uncertainty into an already really tense situation.
Okay, so here's the play-by-play of what's about to go down. First, the current chair, Jerome Powell, is stepping down in May. Second, the president gets to choose his replacement. And third, he's been crystal clear about what he expects from that new person: aggressive, immediate rate cuts.
So this seems pretty straightforward, doesn't it? The president picks his person and boom, he gets the policy he wants. But, and this is a huge but, the way the Federal Reserve is actually structured, well, it's not quite that easy.
And this really gets to the heart of the matter, right? Do you think the Fed chair actually has the final say? Can one single person, even if they're handpicked by the president, just single-handedly change the direction of the entire U.S. economy?
Well, here's the shocker. The answer is a big fat no. The Fed chair might be the public face of the bank, the one we all see on TV, but when it comes to the huge decisions on interest rates, they get one vote. Just one. There are 11 other people sitting around that table, and each of them has a vote of their own.
And that is the key to this whole thing. The system is designed for consensus, not command. It's meant to be a collective decision driven by data and shielded from the political pressure of any one person. Doesn't matter if that person is the president or even the Fed chair that he appointed. It's a committee, not a kingdom.
And just to make things even trickier for the next chair, that 12-person committee, they're currently split. They've said it themselves, there is no consensus on the way forward. So even if the president installs his perfect candidate, that new person isn't just taking the helm, they're stepping into a divided room, and they're going to have to start building bridges just to get anything done.
So this whole situation leaves us with a huge fundamental question that goes way beyond this one fight. You have an elected president who argues they're carrying out the will of the people. But then you have the Fed, which is specifically designed to be independent from politics, so it can make tough, maybe even unpopular decisions to protect the economy. So where's the line? How much political pressure is healthy for a democracy, and at what point does it threaten economic stability? It's a tough balance, and there is no easy answer. Definitely something to think about.